Good morning and welcome to the live show wherever you are in the world. Let me know if you have any requests and we'll take a look at them on those charts. First up, the pre-market news. Picture this, friends. The US economy hangs in the balance and the clock is ticking down towards a dreaded X date. This is the date when the US Treasury runs out of cash to pay its bills. Joe Biden, along with congressional leaders, are frantically searching for a solution, negotiating to lift the debt ceiling and avert a catastrophic default. But the bitter partisan divide threatens to plunge the economy into financial chaos just when it looked like we were turning the corner. Constantly delaying meetings and playing political games. If the US debt ceiling isn't raised, consequences could be dire. Treasury could default on its obligations. That would cause the value of the dollar to go down just when it's gathering strength. And interest rates would obviously skyrocket. Social security payments, military salaries, and all essential salaries for important services would be put on hold. The economy could grind to a halt. Businesses would struggle with access to credit, and consumers would face further and further price hikes. But the Republicans are standing firm, insisting on spending cuts before they agree to raise the debt level. The stakes couldn't be much higher. The future of the country's finances hangs in the balance. Will the leaders of the world's largest economy be able to put aside their differences, come to a resolution? We shall see what the markets feel about the sentiment of this news at open. You'll have to hold on to your seats, traders. Alphabet just announced major news that could send its stock onto a bit of a rise. Tech giant reported an impressive first quarter performance, stronger than expected sales and profits. The best news, possibly, that the advertising market is stabilizing, which would bring hopes to investors who had feared the worst. But that's not all. Google also announced a 70 billion share buyback program, a move that signals confidence in their own future. With low earnings valuation, would this be a time to be bullish on Google? Let's not forget about their impressive growth in the cloud business, as we saw yesterday with Microsoft beating expectations with regards to growth in the cloud business and increasing at a rate faster than Amazon Web Services. Same true with Google, generating 7.5 billion in sales, a 28% year-over-year increase. Enterprise spending in the middle of some headwinds. Google's growth is quite remarkable in that regard, and likely the main factor behind their quarter one 2023 sales beat. What about the competition? Amazon Web Service generated roughly 3 times the revenue of Google Cloud, but it only grew by 16% year on year. If Google Cloud keeps performing as well as it's doing, it could be a $35 billion division by the end of 2023. With cloud growth maybe slowing in the short term due to enterprise spending cuts, it could be that a broad adoption of AI becomes the major driver of future growth. Business across the world looking to generate content, increase productivity, reduce costs with artificial intelligence. And we are in the middle of a huge productivity crisis. So is AI going to be a huge driver for Google Cloud? The other question is, with an 89% market share in online search, are Google well positioned to make use of AI in this segment, or will AI become a further boon to their competitors, which erode that 89% and eat into that cash cow? Let's not forget Google's impressive earnings potential, though. Market currently forecasts $6.20 per share earnings for the 2024 result, implying 17% year-on-year growth from here, with a PE ratio of 17x based on these numbers. Co-op Mystic, $49.99. Boom! Thanks so much. Appreciate. Thanks so much, Co-op Mystic. Hope you're doing well. Google, highly profitable, expected to grow sales to double-digit increases throughout 2023. Investors, though worried about potential risks related to that ad in enterprise cloud spending, the potential erosion in search market share, and general conditions in the economy might put a disheartening on things. Are you looking to add Google to your portfolio? Significant earnings potential, 70 billion share repurchase program. Fundamental investors will be looking to add. Let's take a look at it on the charts. These Friday charts, if you like. Thank goodness it's Friday. After 4 days of tough love on the stock market, stock futures showing modest strength at open, although, or ahead of open. Debt ceiling worries, as we say, are contributing to cautious sentiment at this period. We'll see how the opening range goes on prices. There are still a number of stocks that I think we should pay attention to today. Boom, there it is. Cobalt Mystic. Thanks. Tesla. Elon has decided to replace himself as the CEO of Twitter. He'll be staying on as executive chair and the chief technical officer. But he's appointed a new CEO. Fantastic cost-saving exercise from Musk, appointing a female CEO who, of course, on average earn 20% less than males. So, brilliant move there from Elon. Less distraction and more focus on the electric vehicle maker. Let's take a look at the Tesla charts if you're interested. Also, News Corp, NWSA, is on the rise in pre-market trading following better than expected quarterly results. Results and earnings are driving everything at the minute because it's all about shareholder value related to inflation. So has the shareholder value, the price of your shares, not going up while inflation is, then your value is being eroded. If the earnings are outperforming its peers, then safe money looks to aim to these areas, thinking they'll have a precipitous increase when other stocks will be stagnant or dropping. So News Corp, despite a dip in income and revenues, the media giant's top and bottom line still surpassed expectations. CEO credits their non-advertising revenue as the biggest boon, highlighting a 38% increase in revenue at the Dow Jones Professional Information Business. Walgreens Boots Alliance, WBA is the ticker, has sold common stock in the drug wholesale company AmerisourceBergen, that's ABC, for a whopping $644 million in cash proceeds, which will have a little bit of an impact there. Even after the sale, WBA still holds about 17% of ABC. The drugstore chain planning to use that cash to pay down debt and for operating costs. A smart move considering their balance sheet. Spectrum Brands, SPB, taking a hit in pre-market trading there. Weak sales figures. They make consumer products and home essentials. So a consumer industry reported a 10% drop in sales from last year. I think a lot of people who watch my show will be interested and find this news relevant. Sales of pet care products showed a slight increase. So that might also have relevance for other tickers. But the top line for the home and personal care segment slumped nearly 12%. Ouch. So we'll get into the charts and look at the major indices ahead of market open. 412 spot 13 for close, 413 spot 48 pre-market. If we go across and look at SPX, 4130 at closed, and into the E-minis. This is the futures, and you can see they're open at 4156. Go to their on electronic trading hours down to the 1 minute time frame. Hit that automation button, and you can see what's happened since close yesterday. This was Thursday's price action. Friday here, ticking over at midnight, moving to the top side. Pushing up, 4156.75 suggests that if we are looking at SPY, currently trading at 413.5, futures pricing in a little bit of Contango, bullish move. If it does manage to open and move to the top side, there'll be a gap left behind. So I would anticipate volatility then and indecision until such times as we see large moves breaking from this range, go back into regular trading time. put it on to 15 minutes, get a picture of what might be happening during that opening range. Clear up some of these drawings. So on these small time frames, 15 minutes, starting on the 15 minutes, how goes the 15 minutes, the 1 hour, the 4 hour, and the 50 and 200 period moving averages for each of those time frames? You'll be able to understand that 200 is 4 times 50, and each of those time frames is divisible by 4. So getting to the next one, we'll get a 15-minute time frame here with a 50 simple above the 200 period moving average, price action above them both. We've had a test of the low within this part of the formation, and now we've come back to the body close highs, but not the wick high at the top side. So in the short term, you might be looking at resistance being around 4146.75, but price action's above that at the minute. And if you were looking back down, it would be the low of that formation that we tested at 4136.50, which was the close. Our SPY is opening around 4136. So if, say, the market's open and prices move down, we would expect to see futures making an outside move to these lows within this formation and trying to test those levels, especially after an inflection point during market opening range on the last day of the trading week. So you might expect to see volatility right at the bell pushing to those levels in at around 4136 or to the top side 4146. Now again, like I say, we're already above it on the top side, but it's doing what it's doing anyway. So hourly time frame, there's a 200 period moving average, price action open closing above it. This again, pre-market. No, it's regular trading hours. It's on the... Why am I doing it like this then? Should be on SPY doing this. Anyway, still, I made that point about futures being in Contango, and then we'll go on to SPY to talk about the 4 hour. And again, you're above the 200 period moving average. This is more familiar here. Back above the center line on the RSI, you've got a gap above. That would be filled at 412.56. As you can see, price action above that. So we're opening, creating a gap within a gap, and that would be a highly illiquid zone. So if price should find itself falling back after open into the gap on SPY below 412.59, 412.60, then you'd be looking at it likely making a really quick move down to 412.42, which maybe not seem like a big move on SPY, but if you're trading futures and you're getting, 10 contracts per ticker, that's $100 for every 25 cents or whatever it is, the handle size you're trading. There's 200 period moving average, like we were saying. 1 hour time frame. Let's drop back down to 1 minute actually, down here, just check it. Yeah, so I'm not going to see it in a regular butter. 50 simple, 200 period moving average at the top side at 4158.57. Could be a quick move there. 50 simple down at 4156.25. That's just a back off, but 4 ticks. Definitely see that possible. Chances are it's actually hitting those levels before pre-market finishes. So I wanted to do actually on SPY and look through this, but we did do it yesterday, and if you saw the video that came out this morning, you'll have a good idea. 4 hour on SPY, above the 200 period moving average, you've got these gaps above that price action could also move into. So various levels on different time frames with low liquidity. On the 15-minute time frame, you can see where that is. It's obvious on the 4 hour it's still there because it's a gap in the nature of the way stocks work, but that's the first place to look to. After then, you've got historical gaps that have been affecting price action throughout this range of behavior since 5th of May, with the top side influenced by the peak, and underneath we find support with the 200 period moving average back above this zone. So if we are holding the 200 period moving average, which itself is in and around the middling area between these two extremes, then we would use that as a good instance to take the 200 period moving average as a proxy for the trend. Price action using it to make decisions as to testing either support or resistance, and that would be giving you a good signal then for the rest of the trading day. If during the opening range, because of these ambiguous factors, if there's a resolution to those questions with the gaps, with the gap we're about to make it open, and with the areas where there's very low liquidity, if a resolution of those tests proves conclusive, then it would be very unwise to trade against that trend direction throughout the rest of today until such times as we reach killing hour or the end of the day, whatever you like to describe it, on Friday. So top tip there. That's the 4 hour. That's the 1 hour. On the 4 hour time frame, we've also not actually got to worry about that gap there. What's on SPY? You don't have to worry about the gap, but you are going to be creating one here, which is relatively significant compared to those we've currently got on the 4-hour time frame. It'll be of a similar size to that guy above. I think that's worth looking at then. So you're going to have to pay attention to this gap underneath. The 50 simple in the 4-hour time frame is coming in very strong with a positive trajectory, and it's been supporting price action very well. It's also true to say as you go up through the time frames now, the increasing look back period up until such times as you reach the monthly time frame, everything below 410 is just a wick underneath a body close. So all buying opportunities, and it could well be that this is a similar situation presented by the slope and the trajectory of the moving averages, especially as you've seen those wicks below result in positive candle close most recently there on that 4-hour. Onto the daily time frame, again, these moving averages with a positive slope, positive splay and price action putting in higher highs in this leg of the trend. Question is, how does it respond to the tests up here? And typically if price action is putting in higher lows, it would put in an equal test or push higher, and then we'd measure the strength of that relative to the previous peak. But so far, it's hard to ignore the fact that this thing's in tightening formation, which is comprised of horizontal levels of resistance, which have had a number of touches, confirming that it's real, and then a diagonal level of support, which has proved to be good areas to buy. So that means that the areas of support are coming increasingly closer and closer to those areas of resistance, then staying unchanged, which means that everybody who's buying short here and here and here and here are getting exactly the same value on their trades, and every time they take profit here and here and here and here, they're getting increasingly diminishing returns, and their risk is going up exponentially. So the sensible trader would be less inclined to take short positions at these peaks. Those who are doing so are getting less and less return on their money, and so is it an advisable trade? Much less so than those ones previously. That's true. It's also true to say that if you repeatedly test a singular level horizontally on the charts, it will become increasingly brittle because a number of impacts and yet not convincing moves subsequently, so that becomes a distant area of resistance and price moves significantly away from it. We're repeatedly trapped in the same formation with price action returning to these zones. And when price action does that, you might call it consolidation. If price action starts to make a breakout after consolidation, then those people who are buying the price up will include everybody who was previously short and hasn't closed their position, whether they're in profit, whether they've made a profit overall or not. They don't want to hold price when it exceeds these levels, unless, and of course, they can manage to make a stop work at this zone here. Now, I predict that if price does break up from here, you might see some congestion in at around 430. If 430 breaks, that would be so very significant that I think that you'd go on and look for the next highs within the formation. The first place you would put any attention on is 450, right? Another 20 on top, 5% odd if SPY breaks above that resistance level. And so a lot of people will be looking at these areas for trades. This is a huge indices, lots of volume, and it can be move quite contrarian. So I would be managing my risk at all times trading SPY. 41340 pre-market, not pulling away from us desperately right at these seconds in time. Futures market slipping back and testing that 50 simple on the 1 minute. On the 15 minute is that on support, and then 30 minutes test there of a cross, 4 hour gain, bit of a cross. So potentially price action slipping back, filling that gap and finding support. Today being Friday, a lot of volatility possible. Interesting. Speaking about volatility, VIX still at the low side of this channel, 16.69. Shout out looks beat at this point in time. Stop it lines. So this channel still maintaining its utility for us here. Price action putting in increasingly lower lows. Not yet able to define this as any sort of a turnaround point. 50 simple holding charts down, that itself below the 200, and price action in the low side of this channel. You wouldn't be able to say that VIX looks like it's representative of hugely volatile price action. So in terms of the utility that we would derive from that assessment and that perspective, maybe we're not getting that much value. But if you're looking at it from in terms of what could happen under various scenarios, and then your method of risk management is an assessment of all possible outcomes, and then increasingly narrow focus due to the evolution of events that have implications for the overall probability scenario, then you might be using this potential outcome to see them as a measurement of, if things do change, by how much will they change. And it's massive. It's absolutely massive. Anywhere from here onwards, down at 16, 14, 12, it absolutely massive moves in the stock market. Increasingly so from 14 down to 12, and then if you get to 8, then right, we're all going to be so rich. So, I mean, in like 5 minutes time. So what you're going to really keep an eye on things when they get to these levels. Doesn't necessarily mean you've been seeing trend in volatility, but there could be massive moves coming if you get VIX down at those areas. And we've already seen huge moves just at it coming into the low side of this channel. So, and that often comes when SPY itself is at resistance in that increasingly tightening formation that we just looked at. So that's the take on the charts and the fundamentals, with an assessment of what price action might do at open. GOOGl, Alphabet, pre-market up at 116.77. Looking left, that looks like an 88.6 retracement. We're on it regular, is it? Regular, okay, great. So we've pushed up back. So 88.6 retracement. Look at that. The 2020 vision, eh? Right, so you're looking at 17, 77, 16, 77. You want to be pushing back there. See that you've got a 20-cent gap. That's not significant. Previously, you also had that at 112.15 head of earnings. That's interesting. So, well, just after. What's the news saying? Blah, blah, blah. Right, so, yeah, up at 886. Got a bit of a trend evolving there. Probably it's a wedge. If it fails, then I would imagine it turns into a channel. But for now, I'd be looking at this with this resistance level having been touched 3 times being possibly true. It's a daily time frame, so it's significant enough. And then, as I say, if it does fail in the wedge, it'll probably turn it into a channel. And in the meantime, I'd be looking at it. It's not obviously valid in anybody's brain but mine. This most recent touch necessitates me chopping off the bottom here, but that was bullishly divergent. Class B. Right, give or take. It's debatable that as well, but it's recovery of the 236, and we're talking about this as a rounded bottom, and yet also had very close to being divergent 2 touches beforehand. So we're going to give this as a 3rd touch and then use that as a substitute for what is a violation of the support line here. And I know that all sounds like I'm breaking a million different rules, but I'm able to do these things because I've got a lot of different experience, and I'm trying to make an assessment over and above what a simple pattern might be showing us. Anyway, the point I'm making is that price action, despite it being very strong here and looking good and the sort of thing that catches people's eyes with regards to a recovery, it is true to say that price action isn't yet exceeding the previous peaks that we put in on the daily time frame and saw yesterday. And earnings have come out. The idea of the share buybacks, all their common knowledge now. So just ignore my resistance line on the top side for a second and say price action's decided on its own accord that it was going to pause here. Traders have brought price action a little bit off that previous high. So you want to be looking to the overall market. It's true to say that we're stuck in the bullish controls. It's in the bullish control zone, not leaving it anytime soon. In order to do that, it would have to come back down much further than that previous gap, I suspect, and test that 50 simple, which would be putting in questions about the structure and the trend. And so I'd be looking for a retracement on this thing, but if it persists within the bullish control zone on the 4 hour, I'd imagine it'd keep going to the top side, and then you have got a little bit of a gap fill there. That's good. And so pausing afterwards might be explained by that particular reason. You'll be pushing up to 122.16, and from 116.75, that's a decent enough move. After you get there, you'd be able to put your stop. I mean, at the minute, you'd need it a significant distance down there. Looking at this and taking it off the daily time frame, you'd need it in at around 106. Which is too far away to be taking an entry right here. If you did manage to get a better execution on that, and price action subsequently exceeded 122, then I'd want my stop to be back above 108. 4-hour time frame, with that gap, it's hard to ignore it, and that Google does like to fill its gaps. So I'd be cautious of that. I'd be aware of the fact that we haven't yet exceeded price action back in these significant levels, but the RSI has been pushing at the bullish control zone. All those previous attempts we have come back down again. So it may well be that you're looking for a test of support at some stage. Don't actually see any divergence there. I suppose that trend line's real from that part onwards, and this is since you've broken the high. And then the 1 hour 50 simple above the 200 in the bullish control zone. It's moving to the top side. Like I say, the formation I've drawn on there was just to guide my thinking. It's not actually going to dictate the measured move or price action. I think you're looking at horizontals. 122, that breaks 130. And then I think after this peak, then you'd be looking at it trying to get back and test its all-time high if it starts exceeding 130. It's only another $20, and you'll have done more than that to get to there from here, speaking in terms of percentages. That's a strong test of the 200 period moving average and moving above. What does that look like on the monthly? Yeah, it looks like sort of thing that people look back on as buying opportunity. So you're looking at 50 simple increasing its trajectory, pushing back again through the 200 period moving average. If price action comes and tests that 50 simple before such times as breaking that diagonal resistance, that would probably be the best buy. If not, then I'd be looking at a test of these horizontals that it passed at 106. And then if it does, price action exceeds 122 before the stage of coming back there, I'd probably pay attention to the TA subsequently and be thinking about an entry in around 122. But it'll be about reducing risk. So that's what I think about with Google. I said I'd also look at a couple of other guys. This is why we're talking about this potential doubling bottom. You've got the sort of area where it's turned around before at. I'm not particularly positive about this right now. They have managed to raise a little bit of cash, which they needed to do, though. It was a smart decision, right? So, I mean, that's really bad continuation divergence on that most recent peak on the 4 hour, and this is a terribly strong downtrend. It's also there on the daily time frame, so there's definitely no getting away from that. 1 hour, you've got loads of bullish divergence. You don't have any gaps to aim to the top side, but if you exceed that 50 simple, it's 31.74, which is 30 cents away from current prices. You could put on a couple of bucks. 30-minute time frame, you've got what looks like, again, failure here at the centerline RSI. If such times as you manage to exceed that and pushing at the bullish control zone, I think you'd probably be making that move, testing in at around 32.29. And then if that breaks, you'd be looking at 33.33, 33.40. That would be the closest targets on this thing. I'd be very cautious of the fact that it's in a strong downtrend. It's at these important areas. If it doesn't bounce up, it could put in new lows. And they had to raise that cash. Otherwise, they wouldn't have sold ABC shares. So there you go. And then we look at it back up on the weekly, look left and see what is that. Oh, critical. But then there's a potential trend line. Yeah, so that's this is your departure point here. And that's the trend peaking. You've had a 786 retracement at 29.93. Another test of that area possible if you break up. Do you get confluence with a 236 there? $40 bought 35. That's not happening right now. So yeah, very cautious and don't think that's a fantastic opportunity, but it is interesting to look to. And then what else do we say we'd look at? News. Corporation. No trades pre-market. Ah, lonely. Poor lonely News Corp. Being abandoned. Eh? So failure at the centerline RSI. 50 simple's gone through the 200 period moving average. Huge gaps to the top side, but that's just representative of the steep decline that this thing's had without looking back. So what happens when you fall off cliffs? You tend to look down rather than like back up. So, not that I would know. Right, so you're looking at this downward sloping resistance. Yeah, and that's like pretty brutal. If it does then exceed these lows, that would be falling off a cliff style. Falling off a cliff. This is an important horizontal level to pay attention to. And it's headed in that direction on the short-term time frames. 4 hours, losing the 50 simple below the 200, and you're in the bearish section of that RSI. 1 hour time frame, again, negative slope, negative splay. You've been pushing into these lows, and while it's true to say there's a touch of reversal divergence in that this low is lower than this low in price action, the RSI isn't. Subsequent to that, you had continuation divergence with these two peaks, And that's then perhaps signifies that this is still weak and still moving down. So I'd be looking at this thinking it's very possible it comes in test 1575, and it's very possible it does it today. On the 4 hour, back up to the 4 hour. Doesn't look like it's going anywhere fast, up or down really. 15-minute time frame, will we see anything exciting at open? You've got continuation divergence again. If this doesn't turn around, it's going to crash. Earnings, 86% beat on earnings per share. Revenue, 2.87% beat. Quite good considering the slump in big media ad spending recently. But then, not sure if ad spending was his only concern. His spotter. Right, so you've got this idea of continuation divergence and downtrend, the previous low, and no real confirmed divergence on larger time frames, and I'd be looking for this thing to come back down to 1575. So that's the take on this guy. And laying. Anything anyone wants me to look at? Let's get into the chat box. Thanks so much for that donation, Cobalt Mystic. What else did I miss out on? You're the best. Thank you so much. And flip into these morning shows, and I know then a lot of the people who were most comfortable watching me regularly at the previous times or time zone might then find it more difficult to watch these ones. And of course, I regret that a lot. So if you're inconvenienced at all by the change in scheduling, I'm sorry for that. And but I'll try and organise the various shows I do. Did you see the show we put out last night? Only 100 or so people watched the. It was a really good deep dive into what the markets will look like today and some important news. It was also the PPI report, the producer price index is out, and there's important details in that with regards to inflation. I often talk about what secondary inflation means. Other people call it sticky inflation, which is a good word if you're like in primary school and somebody's trying to explain to you what inflation is. You could call it sticky, and a toddler would find that to be an appropriate explanation. But if you're an adult, you probably want to think about it like in terms of secondary inflation, in that these cost increases obviously affect the inputs for producers when they run their own businesses. So as their base costs go up, then their operating margins decrease, and so they have to increase prices again. And the part of the tragedy of this economic break is that then farmers that go to sleep hungry while they're making food for other people, the steel workers who are in there doing the job, which their contract depends on the overall business's environment and economic conditions, because big business doesn't spend money on hundreds of millions of dollar infrastructure projects when it looks like things will be cheaper in future, or it looks like, you know, which is possible with the idea of inflation coming down, especially in utilities and industrials. It might seem like, well, we could just wait and not spend, and then economic contraction happens as a consequence of these events. And who does that affect mostly? Well, the person whose costs are going up, but when they go to sell their product, they don't get an increase in margin, because of course inflation isn't just driven by the price of their cow. It's in the truck that drives it to the slaughterhouse, the guy that does the work packing the meat, the guy that sells it in the shop, all the overheads for that business, including their advertising, storage, insurance, everything that adds to the bottom line before that piece of food's sold, that never makes its way back to the rancher, never makes its way to the guy working in the steel mill who's not getting called up 2 days a week now because there just isn't the work. And this is the producer price index, which gives us a good impression of what's coming next in the economy, because these people are the economy. So you should check that video out. It's really interesting. Thanks for watching this one. See you all in the chat there. Thanks very much. And he posted an update yesterday. Good one. I'll have a little look at any if you like there. Thanks for the heads up, kitties. Good to see you faces. Thanks, everybody. Yo, I had a look at Carvana yesterday, George. Have a look at route. Shall I put on there? For sure, sir. Check out the Carvana chat from yesterday, George. It was interesting. I'll have a look at it again in a minute, though. Yes, certainly. Sorry, pardon me. Yeah, I'll have a look at Carvana and Root. I didn't see anything else anyone asked there. Right, so Root broke out of this downward sloping channel. It's probably more appropriate to look at this in the longer time frames. Obviously, I have to point out this has been in this never-ending downtrend. In order to change that picture, you really need to take out one of the macro highs. I'd say those would be the levels within this linear downtrend. And so Root is aiming to exceed 750, 7.60. If it does that, 161 extension on this particular move takes you back up to an area where we find a gap at around $11.32. It probably goes go and fill that. It's also a 2618, so you've got confluence across the magic ruler. If you were exceeding the prior high from the previous formation, that would be where you would typically like to go to. It's also the 1618 is the best extension to look to on this kind of a move, especially if you're going to then subsequently see a failure or otherwise. And then you've got a gap at exactly the same area to move to. I'd also say, just from a quick look, that looks to be a similar level to, pardon me, that's not very accurate. Well, it turns out it magically is accurate. It looks to be the sort of thing, if you were to break out from this sort of area, there's a 200 period moving average, it takes you approximately to those levels, which is up at around 10.94, 11 bucks. So if it breaks 750, another big chunk of a move possible. Probably it would be led by Carvana doing well, or at least it would be unusual to see this do well while the other doesn't, partly because of the nature of the warrants that are held by Carvana en route, and all because they're so very tightly matched in their own partnership. And then again, it's exactly the same sector and industry. Well, I mean, it's insurance, but it's the same industry. So you're looking at a sector. Well, I mean, whatever, it's cars, right? You get my point. So yeah, you got a peak mid-level in at around 689. You've got your 80 extension at 638, and you're in at around a golden pocket here, having made this move to the top side, and now subsequently on this 4 hour lost the bullish control zone. So if without the bullish control zone you still maintain above 480 in the 200 period moving average, a 50% retracement on this move, I'd say that's probably a good move, a confirmed support test, especially if you break then back above 570, having tested 490, and see the 50 simple move through the 200 period moving average on the 4 hour time frame, while price action again persists above. You will test that $7.50 target, at least the 670, what was it? 680, 690, and then the $7.50, 760, 770, 780. That sort of 16 was a 1.13 extension here as well. Cheapers. That's probably definitely going to. Yeah. So you do that support test and it works out. That'll be your target. And if that breaks, which I would imagine on the first pass it didn't, you probably put in an oscillation at that stage. This is if it comes back and tests these levels and works out well. You get something to the nature of this test price action that way. The important thing is that it breaks here, and then the target would be here and here. But that's if you're already in a move, and if you are in a move and it's in profit, then you'd want your stop to be following this, the nature of this support level here, this 50 simple here, and this 200 period. And I would say, because of the nature of breakouts and the way I like to trade, that if it is that your stop is in profit and you don't move that stop, then I would look to hold it as tight to price action as possible, while not exceeding that 200 period moving average in the 4 hour, if that was my trade allowed for it. And then if price action dropped back within this channel, I'd wait for a confirmed breakout above the peak of 580 before buying it again for that breakout trade. If I was looking for it and price action fell back within this channel and lost below the 50 simple period moving average, and it again lost the 200 period moving average, I wouldn't be buying this until at the very least it came back and tested the basis line in at 260. That's the most cautious way of looking at it. There are other ways of trading this within the channel, but I wouldn't do it, and I wouldn't give anyone the advice to do it, because I know there'll be other people watching along who will be trading this who will take the wrong decision. So, but personally, George, what I would say is those first take on the TA. Everything afterwards is for people who are worried and anxious and not sure how to do things and might mess up a root trade for whatever previous reason. So that'd be what I'd be looking at, caution, risk management, and trying to manage position well. If it is that price action breaks to the top side, I wouldn't be adding positions in order to bring down entries and whatnot. That wouldn't be how I would manage that. I certainly wouldn't be buying it after it starts its move either. I don't like jumping on trains that going fast. So yeah, I mean, I'd wait for a station. Wait for it to come back to the station. So those are those places we identified, you know, and I'd be very cautious if it did fail it in at around 680 and come anywhere back towards, and if it exceeded it to 50 simple on the 4-hour time frame, having failed at 680, I would be again very neutral. So I'd be looking at following it with a stop. I'd be looking at wait until it makes confirmed breakouts before I get in. If I was interested in it anymore, I'd be waiting for it to come back and test support, having exceeded a profit and stop in profit if possible. And I'd be looking for it to test the breakout, because when price action does turn around, you want to see a proper bottom information. You got something of that nature here, rounding in bottom. You also have a number of touches of divergence throughout this section of the trend, which gave you another bullish result. That comes not dissimilar, like a approximate location to what we see over here, which could then form, you know, a little bit of a weak inverted head and shoulders, you know, matches up with what we see in the RSI, and overall gives us that sort of true to rounded bottom. And you've now subsequently broke out of a downward sloping channel, which is significant, that channel, because there it is on the daily time frame, and it's in the entirety of price action on this thing. It's never been outside of it, so that's significant. You've got a really strong move on the RSI up there on the daily, pushing into the bullish control zone was very positive. So on the 4-hour, if you push your way back in, that'd be good. On the 1-hour, you want to be pulling back above the center line on the RSI. You've got a trend line to look to there. See that underneath? And if that trend line breaks there on the RSI, then I'd be looking for price action to return the first instance to the previous high within this formation that it departed from, and at 4.40. So a failure might look like 440. True tests of success would come at around 680. Carvana had a bit of a pullback yesterday, I think, after we were talking about that resistance level. Yeah, so again, down 9% yesterday. Again, we called these ones correctly, so I hope that was helping people manage these trades. 50 simple through the 200 period moving average. That's significant there on the 1-hour time frame. Price action holding the center line on the RSI after a bullish move. Again, very positive. Bullish artifact with that cross. In terms of this outsized move to the top side, holding the center line on the RSI, very good. But we have found a rejection from a macro level there, and if you go to the 4-hour time frame, you see significant peaks in around here. Could return there and test, even exceed these levels. I could easily see it pushing back above that high, putting in a true divergent peak then, with the RSI less extreme. Price action beating its previous high, testing in at around $15 and change, 14.90. And that could be, you know, one last push in this oscillation before such times as Carvana does then, you know, like come down here, find support at either where we are at the minute or slightly further off, come back up, fail to significantly beat that previous peak, but just exceed it a little bit, and give then some impetus to people who wanted to take profit or go short. A little bit of anxiety with regards to those long positions would lead to people taking profit. That would add to the bearish narrative, and it may well be then that price action exceeds this level that we turn around from now, whether it be here or you come down lower and test 10.50, which is a better value entry, and I don't advise buying it anywhere until such times as it returns to $7 and change, or slightly lower there, $6.70 maybe, or even lower still. But this is what I would think, right? I'd be looking for this for long-term best value. I'd be looking for it to exceed support here and give me a buy signature. That's the truth, right? And if you're looking to build a long-term position on this, George, you don't need to get rich next week. Take your time and manage your risk, because even if you can't manage every move within this, your capital is best expended where you've got the best opportunity. You know, if you're going to fight somebody, right, and this is a fight, and don't let anybody ever tell you any different, you don't want to have to hit them 1,000 times. You want to hit them once in the throat, right, when they least expect it, so that you can, right, that's just like, this isn't about, right, this prison rules, right, there's nothing, right, you're not going to apologize to the person after you take their money off them either, right? So that's what you're looking for here, and don't anyone ever tell you, or yourself ever tell you any different. If you sit down to trade without realizing how serious it is what you're about to do, then you're being irresponsible, because this is a lot, but you could make a lot of money. This is serious, and also you could lose a lot of money. But you know this, you're George. Right, so you're looking for this to come back down and test these levels. The reason why is like added to the context of yesterday's technical analysis and about risk management. You can't predict every move. We don't know if we're ever going to be right. We never know the future. But we know how we can manage our own behavior. And this place here, you buy it anywhere around here, like for example, somewhere around these previous lows here, if it returns to it, or a retracement from this move to the top side that even exceeds those levels, but gives you a reason to buy otherwise, then, you know, you're taking it at the low end of this formation, right? Which is, let's speculate price actions going sideways. I mean, we don't know the future, but it has been going sideways for a while. And until such times as it significantly exceeds $17 and change, which is a significant price difference from where it is at the minute, then it'll still be going sideways. And so sideways means, even though we want it to go up, we could see it going up, we can imagine how rich we'll be if it does, that we don't buy it there. We buy it when it was probabilities are that we'll be able to manage our risk well, and if it moves to the top side, we have the maximum opportunity at the lowest possible risk. Because if it moves up from here and it's a strong test, well, it's already moved up from here before, once here, and it went to there. Another time here, it went, you know, did it go to there? Well, it has done eventually, right? And then this return to it also went up. At that stage, you got to move from 6 to 10, right? So that's enough to make anyone lots of money. So yeah, so this is the place to buy it. In around these levels is the place to buy. I'm not saying you necessarily want to sell here. You could have puts. You could have manage your position with puts at the top side of the range, and then you could, as this falls down, the delta on that might be lead you to more profit than you would get having sold your shares anyway, right? So there's a lot of opportunity in there. If you want to hear more about that, definitely have a look at it for sure. And the particular type of contracts to buy, the expiry, how to manage them with your overall portfolio. They're all things we're happy to take a look at if it helps, of course. But generally speaking, with regards to managing your risk and the technical analysis and the distribution of probability, it's clear that this thing could easily come to these levels again, and it wouldn't surprise many people who didn't operate through bias to see it there. But then it could break out, in which case, you know, you buy it when it does significant breakouts, and I imagine that would be back above 17. Heading towards 17, definitely possible. You would be looking at all these different gaps, the 86 retracement, the golden pocket, get to 21, exceed that, you're looking to 42. That's the huge moves that are coming. So there's no desperate need to jump in now, especially when it might turn out to be a continuation of a downtrend and negative sentiment. What time is it? 5 minutes till I have to go and trade. Should already be setting things up. Bing bong, the game is on, the markets are about to open. Let's go across and look at futures. On the 1 minute time frame. Fuck it, it was 15 minutes, 15 seconds. Authentication. 50 simple through the 200 price action. Oh, do you want to be, eh? Look but never stare. Look but never stare. It wants to start doing something there. Like, that's class B. That's a rejection, though. That's class B here. And that's like either going to completely fall down and fill that gap, or it's going to move up. It wants to start doing something. What does the 1 minute say? 1 minute says you're holding the center line there so far. So it's the 50 simple. So if you exceed that 50 simple, the price will go straight to the 200 and beat it, because it'll also be holding the center line there and having recently put in bullish divergence at these lows. Tested to 200, sure. So test, like, bullish divergence there might suggest you go up and test a number of places. Like, I'd first look to the 236 and then 200 period moving average, depending on its location. Of course, it might not be there to test. If it doesn't hold that 50 simple and does lose the RSI center line on the 1 minute time frame, this close to the bing bong, interesting. You had this bullish divergence, but then you had bullish divergence here too, and price action exceeded 200 period moving average, pushed back above its previous peaks, but then failed to change the structure of the trend and dropped back down again, putting in lower lows. RSI persisting in the bottom half of the indicator there throughout that period. Thanks, Paul. Thanks, Paul. Renew. Yo, gotcha. I caught a live stream for once. YouTube not giving me notifications. Yo, Renew. Thanks. Good to see you. Yeah, I noticed there's what I did was I put the show as unlisted last night. I was only finished making the video. This is why it's so disappointing when it gets so many views. I only finished the video at about 7 a.m. this morning. The market update one. So, and I've been working on it since market close. It's insane. So it's because it's so hard to do a video like that in one day. You know, it's so hard, especially one person. So it takes ages and that. It's really useful. It's really valuable video. I'm proud of it. I'm proud of all of those market report videos. They're top quality, but at the same time, it's really tense work effort trying to get this thing off the ground. So, what am I talking about? So I'm really tired. That's what it is. If Jimmy doesn't get your ticker, he'll do it on Splushing. What ticker is it? Who's asking about it? What is it? Did somebody donate for a ticker? Sugar. If they did, I'm sorry, I didn't notice. TSN. Paul B, you betcha. Paul B, you betcha. Tyson. 4.36. Oh my god, this has turned brilliant. This has turned brilliant. Right, so we had this massive dump because their earnings were terrible, right? But these guys are true stock operators. There's like ethical concerns. But if we bought the company, we'd own it and we could be fair to the farmers, right? Not only could we be fair, I think there's a massive, massive opportunity that these guys have gone so back, like vertically integrated backwards. I don't mean go backwards in a, counter-progressive sense. I mean, they've vertically integrated backwards in that they own their cost base. In what might be a dubiously ethical, debatable situation, right? But at the same time, we can buy the company. So, no, we can't. It's huge. It's far too big. But they're really good stock operators. And we can definitely get involved in this thing. They've got a significant dividend. These prices represents massive percent. It was 3% up at around 62. And the price dropped 20 odd percent. So, it's huge dividend relative to your capital appreciation. Passive income from this thing could be huge, especially if it turns around. At this particular part of the low trend, you've got bullish divergence on that 1 hour time frame inside the bearish control zone again. Not yet managing to put in anything significant there on the RSI, but you have come back to a previous level resistance. If you exceed that, quick move back up to 51. That's 4 or 5%. Obviously, you're at a level of resistance intermediate here, so it's kind of difficult to break there. Should you break it, you're going to 51. If you get back, test the bottom side of that gap. I don't necessarily expect this gap to be filled on its first pass, because it's due to the result in earnings, and people suspect that there might be long-term issues with Tyson because of the nature of their operating costs and the problem with commodity markets at the minute. The dislocation in price and some of their competitors' moves also putting shockwaves through this chart here. So what I think with Tyson is they offer a massive dividend relative to the potential opportunity to the price point at the minute. They've got a clear area in terms of this gap to aim for, which in terms of a percentage move, 10% or more, it's definitely justify a trade with that risk reward if you can find a significantly robust entry. And price action having come down and tested the 886 in these lows, it may well be that it's aiming for that 51 intermittent target, the 786, and we could put a 236 on this guy and work out where it might be. I mean, I've already got this, full disclosure, I already got some of this after the dump, after the video we made there. And I know a number of people in chat box did too, thinking about the dividend. So keep an eye on it for sure. Thanks very much for the tip there, Paul. It's appreciated. Right, so what are you looking at in terms of this, Paul? And I'll try and give you like contextual information looking at your trade. Like I say, 886 retracement from the peak. That was a double top, which was bearish side divergence. So you're going to come back in search of support. May well be that you found support at a 236. That was back up at 84, and you did bounce there, come back up, and again you failed then to get back into the bullish control zone. The RSI price action rolled over, and you're probably going to test the 382. That was also where it found the 200 period moving average. The fact that price action didn't bounce there significantly, while having found itself in the bearish control zone, would have been a very bad sign. You know, that's a bad sign. And you would have been, if you weren't catching a knife, you know, if your trading was wait and see, and I'll buy it when my thesis is confirmed, or at least on the route to being so, then you would never have been buying this, and you would have watched it fall through the 382 and the 200 period moving average at the same time, come back up, find rejection at that 200, and then subsequently create a new lower low on this leg of the trend. Looking left, you'd have imagined it going to the 50% retracement, and it exceeded that. So you'd have thought, this is terrible, right? So your early signs that you would be punished by the trend should you go against it were very and truly confirmed in around $62, where we have the subsequent then failure to push up. We've got a continuation divergence with the RSI pushing up higher every time, price action pushing lower highs. Underneath then you've got bullish divergence, but we met with cat vomit on every peak, means that it's going to get rejected, and then the gap exceeding the previous low at 55 and taking out all these zones. It was likely to come down and at least test this inflection point in around 49, and then subsequently you would go to the nearest Fibonacci area of interest at 47.59. So this was good. This breakdown made logical sense, and the psychology at various parts gave every trader a heads up to what was going on. You know, all the information here that I was just talking about, that's all quite obvious to me, and it's available and there to everyone. Right, so there's the 50 simple, went through that 200 period moving average as price action was putting in a continuation divergent high and failing at the center line on the RSI as negative earnings came out. So you were going to get a negative reaction. As we say, this was likely one of the areas it would go to. EA, please and thanks. No problem. You're welcome, Paul. Definitely get an EA next. Right, so volatility there. So TSN, sorry, now there's the reasons for why it went all the way, it went to where it went to. Ooh, 1 minute's moving around. 5 minute time frame, what we're seeing here, get this Fibonacci. Yeah. Sorry, camera's in this bit of the chart. You're in the chart, chat. 236, target is 50 spot 50. There's a bottom of a tiny gap in around 50 spot 41, 50 spot 24. May well be that you've got something in around the, whoops, a daisy. Something in around those areas. Might be some people looking at that as a zone to take profit at the bottom side of that gap. If it closes and price action pushes back above that gap closes at 50.74, then you will be targeting 51.50. If you exceed 51.50, I'd look to it probably actually come up and test. Yeah, no, screw it. You've got so much continuation divergence again already. Like you would have to put a target of 52. Even then, I'd expect it to be showing weakness and be looking for a test of support. And it doesn't look like it's going to have an immediate. This is just from right now's picture, though that is huge. If this isn't going to break down completely, that's going to represent an opportunity. But again, it could break down again to say the 200 period moving average. You see it at $48. Right, if this loses 50 simple, probably does go that 200 because it's failed to break above this peak. If it does push back up on what is obviously a little bit of divergence right there, but then again it's gone on the top side too. If it does push up, this is so strong that for the price action not doing anything. If it does push up, then it'll exceed that previous high and go to 50 spot 54. If it manages to get there, it's the bottom side of a gap. If it closes that gap, your next target is this peak at 51.50. That's the important level, 51.50. If it manages to break above there on the signature it's putting at the minute, it's unlikely then it would exceed 52. And it's probable that if price action gets here, that it comes back and tests support. And if it does break through there, this would be the next place to look to. And it probable then it does test that level as support, that being an important level of resistance and where we lost our previous, the idea that we go back up with this bullish divergence was rejected here at 51.50, and then on the other time frames we saw it significant too. So I'd say this is very important. 51.50, break above there until we know anything significant. It may well be that you take profit at these intermediate levels, and if this is putting a breakout, you could re-enter, right? Now, of course, there's wash sale rules and all the rest of it. 30 days, you can't buy back at a lower price than you sold without then experiencing tax obligations. Your brokerage will probably catch you for it until you're nutting for it. And they've been getting way more strict on that over the last 6 months. So, not trying to get around the rules. I mean, I agree the rules they work, but the point is, you should be aware of that if you're buying and selling repeatedly and at many levels. Which means it might be that certain contracts, certain instruments suit you better than others, but obviously they've all come with their own risks, and some of them aren't worth it. Right, so there's that, and if it does exceed those levels, really the target on this thing before you'd be seriously looking at, if you've got an investor and you're saying, right, I was looking at this as a dividend opportunity anyway to add it to my portfolio, rather than this is a buy that turned into a hodl because I didn't know when to sell it, and now I've got it in my portfolio and I'm underwater and I don't know what to do with it. That's what some trades end up for some new investors. Other ones are, this is offering a fantastic dividend opportunity. It was going to give me capital appreciation over the long term because this is a market leading company. And this has got a dividend, so it's going to give me passive income so I can grow my account over time without having to manage the position. So they'll have different perspectives and different approach to how they trade this chart. Most of them will have their eyes on $54 as being significant and looking for it to exceed that for them to be very, very bullish. Until such times as that happens, I think it might just be that the short-term traders are interested in taking profit. Those people who are looking to add to their portfolio will be waiting for good support areas to buy at, and as such it might not be immediately moves with huge velocity to the top side, but instead a grinding return to a positive trend after significant tests of support, and that would be you know, it would have to push higher to come back in order to push those areas to be support above. Alternatively, it's coming down and testing the previous low at 47, so you'll get a quick sign if it breaks 48. An early sign of that would be not holding 49 on the opening range, and then a failure at 50. If it doesn't manage to get above 50, so it's 50, then the biggest test comes at 51.50. After all of that, you know, then the factors that led us to derive that conclusion will then become more important in their own individual right and be worth considering again in isolation, as well as that overall total holistic picture we delivered there. So that's what we're looking at. And then what was the next one you asked for? EA? Electronic Arts, strong move at open. Is it? 5 minutes? Yes. With that formation back above the 50 simple, 200 period moving average was most recently support. You had a bullishly divergent low. You're going to go on test resistance. That's 126 spot for 72. It's heading there at the minute. You've made an 886 of that move, so it could already be done. But then 15 seconds says, go for it. The 1 minute says, I'm in the bullish control zone. You can't stop me now, folks. 5 minutes says, I'm in the bullish control zone and I'm going for that target up higher. 15 minutes. This is a reposition in here. Closing a gap. Boom. Comes back down. Bullishly divergent after that. You see, this is like when individual market participants cause big moves on the chart, and then everybody else then benefits from how that test of support and resistance and volume at the point of rejection provides them with contextual knowledge for their trades. So the fact that this thing's finding, having it made this outsides moved, finds a retracement back towards the 50% level, that's like not crazy. You would be obviously testing the midpoint of those two extremes, and to do it relatively soon afterwards doesn't then lead to a V-shaped recovery or a tweezer bottom, because this thing came midsection and trend fill the gap. And it's perfect for if you screwed somebody to then afterwards take all their money and use it again. So the 200 period moving average, it held that. It was a 382 back above 50%. If you do exceed 126.72, you're looking for 126.97, the golden pocket retracement, and this thing pushing back up again. It's obviously sideways price action. From previously there was this gap that's now been taken out, so it may well be that, you know, there was a lot of, like, this is a very illiquid zone, so when price action got back, then that was very quick through it, but then it was very quick on the approach to it, wasn't it, too? Anyway, 50 minutes, only so much you're going to get there. Pardon me. 1 hour. It's a rejection from the 200 period moving average most recently. You're back above the center line on the RSI, and the 1 hour, small as it is, meaningful. The 50 simple is below, but you're pushing now. Boom, back above. You've tested that target. What is that? Did you get to it now? Where's the peak in price action today? 126.54. Not yet, but it's on the road. We're on the road. We're on the way. Right, so yeah, there's 200 period moving average. If you break that at open and close above it, that'd be significant. Holding the 50 simple at 126.19 in the meantime, even if it doesn't hold, it's good. 4 hour time frame. Have you got any support there? 50 simple above, back up at 126.82. It looks like it wants to try in that direction. Having closed the gap and got rejection subsequently, and put in a touch of bullish divergence, you're coming and finding resistance, right? So you're on a search for resistance. The 50% retracement, that was the first test, and that's where you would have expected it to go. This is the 50 simple period moving average at the bottom side of 618. And I'd anticipate that being resistance at the first pass, but you are pushing back through the centerline RSI, so that's positive. If you're looking at this long term, the daily time frame, you just found support at the 200 period moving average. The 50 simple is approaching that direction. You have got a huge gap back below at around 118. If you are to break down below 123, then you probably do come in and test 121, which is 50 simple and the significant area on this breakout. So I'd say that would be likely if you did break 123, testing 121, and then that's probably a bounce in the first pass because it looks like you've got a little bit of a trend line there. If that does evolve to be a failure, then you'll be looking at 117 and then 116. And on a daily time frame, that would be losing important moving averages and putting in a lower high, a lower high, a lower high, and in between a lower low and a lower low. So if you do slip below 50% of this, then I'd be worried about whether or not this was coming back down. I mean, it's just 50%. It's not a magic ruler. Like, it's a joke I make. So yeah, so that would be in at around 1890. Yeah. So if you do come back down, which you need to fill this gap, if you do that, 1890, then I'd be a little bit cautious about Electronic Arts and worried where it was going. EA Arts. So EA aren't just exclusively about their headline titles. They're also about the distribution, which is a lot of these companies now are also about the distribution methodology. Like, EA is the franchise, not because they've got the best developers. They buy the developer companies and they put them into their company. And then it's all about EA's distribution because you've got that brand name. And so people want to play, EA. Anyway, so the point is that they're also affected by the machinations with Activision Blizzard and all this potential merger news that may or may not end up going through. So there could be huge volatility coming in this thing, and there's loads of gaps already, so it's not as like it's not familiar with that idea. There's the weekly time frame where the 50 simple is losing the 200 period moving average. That's very, very, very negative if that happens, and it would be confirmed with price action closing below 124 on the weekly time frame, which with this putting in that amount of continuation divergence, right, because you've got this downward sloping resistance across the top of price action since last February, 2 Februaries ago. You got this is all just true, and at every one of those occasions, here's the peak, right, when it started, so you can't really go on that, but even that was divergent because it was higher than the previous high, but the RSI itself was lower, right? So you're going to come back and look for support, and on your search of support, you're probably going to, this would be the low here, be looking for at least a 236. That was at 124. That's another reason why it's that's so important, this level at 124. If it loses 124, it's going to 112. I've already explained why anything below 120 is bad. Then I'd be worried that it'll come in and taste $104, right? $104. If it exceeds this previous low, that's where it's going, 104. And then the 1618 matches up with a 618. It probably does test in around 96 if it breaks down completely. And when you put that in context of the overall formation there, it would be like this broadening, got a number of touches on it. That's probably not real yet, but you could be testing it with the bodies. Say, like, that's real, as a channel too. So testing in around 108 again, very possible, especially because you've got this continuation divergence. That's the point I wanted to make. At these peaks here, price action putting in this signature of the higher RSI here. So much higher than that previous peak. Price action itself only matching the same wick high as it. And then again, this situation here, price action pushing really high on the RSI, higher than previous peaks, but price action still not managing to exceed these peaks, right? So divergence, so continuation divergence. So at this stage, you're getting a rejection, you're coming down testing the low side of the channel. This stage of rejection, low side of the channel. This stage of rejection, low side of the channel. And then again, you've got that continuation divergence, and you're at the top side of the channel. So does it come back down? If you lose 124, I'd say you're probably on for 1, 2, 3, and another repeat of that. If such times as it breaks above that downward sloping resistance, the next significant peak above back up at 152. That's a big move, short term. So that's the TA. Its trend at the lower term time frames matches with this overall formation on the longer term time frame. So it's very difficult to say that the trend is to the top side. You have to get right down to like the 30-minute, and even then, you know, most recently, if you're looking at these as lows, they're lower lows. And if you're looking at these as highs, and like certainly you could use that as one, these are lower highs. So if it doesn't break that trend, you know, it's a continuation. The next level, look to 151.54, then again breaking 118. So that's what I'd look to. But if you know, that's like looking for it there. If we go down even like 15 minutes and whatever, and you can say like, if we put context of price action is it's just this, right? It's just this. Then you've got, again, you've got this divergent peak here, but you've managed to get back above the center line. And on those tiny time frames, you were looking to test that little bit higher. It's bullish there, pre-market for a little bit, 5 minutes. Bullish control zone, so I can't argue with that, and it looks like it wants to test those targets to the top side, but it's very much like risk on. There's a cross there on the 1 minute with the 50 symbol going through the 200. You're divergent and in the bullish control zone. So if you did lose that without exceeding these highs, like at that 126.74 and whatnot, if you do not exceed those levels and then lose the bullish control zone subsequently, I mean, I say subsequently to something not happening, that's obviously nonsensical. But if it does come back and test those levels, then that would be bearish if it hasn't previously exceeded 126.75, and it could be that it comes back down and shows some sort of a failure. But you'd have to be looking at that higher time frames, and with the 200, with the 50 simple at 126.80, and price action pushing to the top side at the minute, especially with recovering the center line RSI, and you've got the bullish divergence at the bottom. It may well be that it just wants to find resistance, and it could well not actually get knocked away, and you know, until such times as it's found a true level and a proper test of resistance, then it comes back down again if that's what's going to happen. But I'd manage my risk and be careful there. Thanks, Paul. Yo, Dashi. 12 months? Is it 12 months? Mullen wiped out stops in at 131. Well, that's good if it's gone a big chunk down. If you had your stop in. That's good news. Dang, I know how it stings though. It does sting. But that's good. It's good that you're paying attention to it there and have seen where it's gone to. Have a quick look. I want to wrap JME in a cloud blanket when he could see the charts through while magically bought deep rest in every other way. That'd be nice. That'd be nice. Wow, that'd be great. I had to also call the sound. You know, probably you're aware of if you watched me for a while. Like I had this commercial establishment that makes noise all the time. I can't really get to sleep properly, so I had the sound people out from the council. They come out and they witness the noise, and they had to come out 3 times last night, 2 times yesterday, 3 times the day before, and 7 times the day before that. And all but 2 occasions they caught the people, and they don't turn the noise down, you know, and there's no enforcement or anything. It's so difficult, like. And they're starting to appropriate my back garden, so I can't get in it or use it now without literally being physically assaulted by the staff who work there. And it's a total nightmare. And they try to drive me out of my home in the worst way. And all those shows you see about on TV where you're like, wow, that's a nightmare, that never happened to me. That's happening to me. It's been happening for 2 years with this establishment. They're really they're going out of their way to make my life hell so that their business works, because it doesn't work in its current location with their current business. It just, the business plan doesn't work, and the only way it works is if they abuse their position, and that's an absolute disgrace. And the council that are supposed to protect it's a human right to have peace in your home, be able to sleep and live. And the pollution, sound pollution, noise pollution, especially with the nature of this type, it can have a very damaging effect on people. So I've got a resilient mental health, but I worry for other people in this local authority who have to deal with a council who will not enforce the rules. I also am aware of the fact that I live in one of the most popular cities in the world for tourist destinations per capita of those who live here, and that millions of people move into a city that's only built for 250,000 or 500,000 full-time residents during the year for a few weeks of the year during the festival. And this particular business was only viable in any sense because of that period of time. And they've removed their internal staircase. The only way you can even get to their venue part is through my property, which is insane. It's insane, the abuse that I'm putting up with these people. It's insane. And the truth is that I only actually moved to this house so that my mum could move elsewhere and not have to lose this house from the family. So I got it off her. And she had to do that partly because this bar drove her from her home when she was critically ill. It's a disgrace. It's an absolute disgrace that people can get away with these things. And if I wasn't a young, tall man who can stand up for myself and knew the rules, there'd be people out there who'd walk all over you. And it can be a drag, 2 years in, do I make the phone call? Do I have them out to my house, which is a building site because I'm trying to do it up? Do I want that? Do I have to go through that experience day after day, over and over again? Is it a drag? Does it affect me? Of course it does. Do I still do it? Of course I do. Will it overcome me? Will it fuck? You're going to sue them, Jamie? Yeah, we've got all the evidence, and the longer it goes on, I've wrote to them, I've notified them that this is going to cost them money per day. They've been notified and they're aware of and have been recorded and witnessed by the council. So I'll be taking it to the small claims court. I'm going to start billing them every day. I'm going to start taking it to the court at the end of every week. And I'm going to make sure that I am their cost basis. I'm the biggest cost to that place. They're going to pay through the nose for what they've already done. And they're going to pay until such times as they stop. They're going to learn how it is that the world should work and what it is when an arsehole meets an unstoppable force. They're going to know exactly what happens. Don't worry about me, not on that front at all. I'll do it in the right way and I'll do it well. They know it too. Anyway, people aren't interested in that. They're interested in trading. But I have to go and do some trading. Yes. So thanks very much for watching the show. Sorry for that. Sorry for that ridiculous outburst. Yeah, sorry for that. No one's really interested. And you don't need to worry about me. Everything's positive. I'm well and truly able to handle little things like that. Not a problem. Remember the burglars? Yeah, I do remember the burglars. Frickin' burglars. I've got a lock on my gate outside now, so I can have my front door open a tad and not have to worry about someone burgle me on the live stream. Well, I mean, they could if they climbed a fence. Somebody, if you're in need to do these sort of things, climbing a fence isn't that hard. Still, yeah. Sneaky people, man. Hey, I feel bad for them because, well, not really. Not really. Anyway, do I feel bad for them? I don't think so, Banana, yeah. I don't really think I do feel bad for the burglars. Not really. Good job, Jimmy. Way to use the rules to protect your rights. Thanks, Luke, Lurkin. Yeah, thanks, man. Yeah, that's the only real point I wanted to make at the end of it. If there's a takeaway from that story, it's that don't let these things overcome you. Don't let them get you down. Don't let the little creeping, insidious nature of this affect you too much. Always stick up for yourself. Try and stick to a consistent line. Write things down. Record events. Speak to the authorities. And if it comes to the worst, you'll always have a lawyer who'll be able to protect you at the end of the day, because if you've recorded the events and you've detailed the case, then they'll know there's money in it for them too. So you'll be fine. Don't worry about these things if they're ever happening to you. And if you've got great friends and family like I have with you guys, then sure, I'm sure it's not the end of the world. Anyway, right, so big trading day today. Lots of things we talked about. Being resilient is part of being a good trader. If I couldn't deal with that, I wouldn't be able to deal with all the other stresses that come with trading, I'm sure. So, thanks. Thanks so much. Thanks so much, Paul. Thank you, Cobalt Mystic. And what else did I miss? I probably missed other things. Oh, shit. I said I'd look at any as well, and I didn't do that. Just think if I've missed anything. Very much sorry if I've missed anything here. Load up already. Pobby. Thanks so much, Paul. You're really generous. I really appreciate it. Guitar. Macchiato and a wee GME update, please. Guitar outside you, buddy. Merrick, $5 yesterday. You betcha, man. Thanks, Merrick. Thanks, everybody. Yes, I'll get just GameStop. Somebody, I think it was Dark, commented, "What's with no GME this week?" And I was like, wait a minute. You haven't been watching the shows this week, Dark. You have missed all. Derek, you've missed some of the shows there. Right, so I swear these drawings move every time. I swear my drawings. Anyway, right. So we're at the basis line. We tested that at 50 simple, 200 period moving average, recovered it back above $20. That's great. That's 382. We tested that yet in around 21 spot 1 2. We did. We tested that. We did, folks. We tested that. That's great to see. Subsequent to a test of that Fibonacci level, having then not been rejected immediately and having persisted above the 50 simple itself, above the 200, very positive, and all of that relative to this 236, way above it. Great. That's what this fib is. I don't need this left fib. I've got him on the right. Get out my face fib. Right, so, and this guy breakdown, don't need you there either. So from this low to this high is what I'll be doing on the right here. And we want to hold that 236. That comes in at 20 spot 40. So the first sign that things aren't like absolutely amazing might be if it breaks. Why are they so thick? That's what he said. So the first thing is you want to hold 2040. 200 period moving average coming in around 1983, 1980. I suppose you'd put that as the next level, but then that's like exceeds the 4-hour support on this candle itself in decision, and it last tested the 200 period moving average at 19 spot 97. So anything below that 236, I'd be saying likely then you maybe come down and test all the way down in 1956, where you've got a 50% retracement and another significant poddy candle with an impulse move subsequently here. Oh, it's so tiny, and I'm doing this on the tiniest. It's right here. I can just make it massive and show you all, because this is a really important lesson. Right, so price action. It exceeds this important level here at 20 spot 40 something, right? You're coming back down. There's a little bit of an area here, an inflection point. Maybe it's a gap, who knows, at 20 spot 30. Fill in that area and test the 200 period moving average in at around $20. Now, that's all very possible. You go beyond that, people would be looking for a test of a 382. But if you had gone beyond that, you'd be losing this inflection point here. This is an inflection point because this is a doji candle. Subsequent to it, we had a gap, and the one before rejected from the 50 simple with the wick. So overall, these three candles, in particular those two, give you loads of contextual information, also providing a significant level of support relative to price actions, then subsequent behavior, because it goes up to the top side and doesn't test this area again. And you candle nature of the candle bodies, one of them being a doji, and the gap, and the 200 period moving average. If you're to exceed that, I wouldn't be putting any faith on the 382. Know what I mean, right? You're like, what? No. And I'd be looking at the bodies there, where there's another gap, and I'd be targeting in at around 1940, and which is also the previous high from this formation. And I'd be looking at those levels. I imagine if I drop down to lower term time frames, I'll see some sort of interest there. 50 simple, obviously, in around that level on the 1 hour, have been at the 4 hour. 15 period, 15 minute, you see 200 period moving average actually is around that 382 level. So maybe a bounce there. If not, it is that gap and filling it at 1950, and you'll have an impression of what's going on when we look to the momentum. We're holding above the center line there, that's positive, and we've got increasingly higher highs, that's good, and this is coiling a spring with it's got a touch of what you would say is momentum behind it, you know, in that like these lows are all increasingly higher lows, and same can be said on the RSI, but when it does make these local oscillations down, when let's define that with these two lines, right, there's an uptrend measured underneath price action. Hello, price action. Hello. Yeah, so this is this section of the trend measured its strength to the top side by taking a picture of what's going on at the bottom. And there's the resistance measuring the strength to the top side as a picture of where it finds, you know, a reason to slow down and then turn around. So like the oscillations within this, then we find highs and lows. Like here's a high, here's another high, it was divergent, right? And when it was divergent, the question became, well, where's support? So we come down, we test support, it's within this formation, it's that line, right? And then you recovered to 50 simple. It does slip out of there a little bit, but you know, like I'm not being accurate with that line. I'm trying to make the point that it's now really made. Then subsequently price action came down, right? It was at this low ebb here. That's a significant retracement on the RSI, whereas price action went all the way up there and just down a wee bit. On the RSI went all the way up there and down a huge chunk, right? And in the context of an uptrend, that means, well, where's the strength to the downside? We're not seeing it at a test of support and it finds support and bounces back up again, is it? That's not, you know, well, obviously it did well, and you're not going to then go in and fill that gap until such times as you break these previous lows. And the question is, where is resistance? Is it at a peak that we've made its way to currently, you know, and you could say there's another channel going on in there, probably it is, and it's around 21 and change. Or does it exceed those levels and go back to this like macro, so like say macro, but slightly wider picture, encompasses all of these different trends, and you're looking at a wedge. And obviously, if you're looking at a wedge and you know what wedges are, that would suggest that you've got a potential breakdown coming if this failure leads to a reversal in price action. If you should lose it, you know, that's not a very accurate. I'll use the actual tool and stop being such a silly billy there. I can also make this bigger again because I've got lots of screen real estate and I don't know why I don't use it all the time. I have a problem. Maybe it's a hole in my head. Who knows? Right, so you have this. Now I've interrupted the TA with the story about the bar. I was planning on just going and editing that and cutting it all out because it's like nobody's going to be interested who's a new viewer or who's just new to Tradespotting about any of that stuff at all. And the total entirety of this show is to help people get better at trading. So I'm not sure if it's relevant. Anyway, I'll maybe try and figure out how I can cut it out anyway. So here's this first test that encompasses the entirety of that range. If you're to break down, coming back then, fill in that gap in at around $19, fill all of those gaps towards the, you know, you'd be slipping back down, be very dodgy, right? So you'd be looking at that, and it's very true that could happen. Alternatively, it could break to the top side, and if it does break to the top side, I would imagine even if it breaks to the bottom, what you would look at first would be the wedge becoming a channel, right? That would make sense with the 200 period moving average there on a 15-minute time frame and finding a little bit of a bounce. It's also more or less like the low within the formation that you'd be returning to. Oh, well, you've got this wedge formation. Again, I'm going to draw the wedge now there. Like, that's the worst drawing ever. There's the, oh my God, it's even worse. There's the wedge. Oh, that one, nope. You get it eventually, right? Bob Ross style. So there's the wedge, right? But actually, there's other formations on the go here, including this sideways price action here. And if you are to break out of the wedge, you probably come back and test then the low within that formation in the sideways price action. So that would be in at around $20. So hold 20 positive, especially if it then subsequently goes on and breaks $21. Don't hold 20. You probably come back down. Probably come back down. And where's my fib gone? My magic ruler? Where are ya? Do you ever see that show Jamie and his magic torch? But if you've ever got editing skills, do you want to make me Jamie and his magic ruler? Right, so, yeah, I mean, you probably test that level if it baracks down. Baracksy downsies. And then if it doesn't hold, there's your 1.13 makes sense for the basis line retest. You could get a bullish divergent low there. And if GME does collapse, then it's come back down, test $17.50. If it moves to the top side, we'll see it hold 20 if it moves down at all. Alternatively, it just boosts right up now and goes through 21. I'd like to see that. In which case, you'd be hopefully targeting 21.50. That break should be looking at 21.90, $22, 21.90 really though. Break above 21.90. The next target 23, 24.50, $25. Downward sloping resistance on this guy, which is all very possible because the fib we deleted at the first place shows you this recovery that we've been making, right? Hold 20 spot 92 where you're at right now as I speak. You're breaking the 382, you've got the 50% retracement at 21.98, that $22 target. You break out of that, it's a channel, not a wedge to the top side, rather than as we defined here. We showed you how that wedge could turn into that channel. Well, it could also turn into this sort of a channel, you know, come up, test those levels, boom, goes back above it, golden pocket, matches these highs and this peak within the formation before you broke down again. And if you break that, you're going up 786 or an 886, and you'll see it $25 and testing downward sloping resistance, and that is GameStop. Boom. Boom, that's the best TA you'll see on GameStop on the internet. Also, you'll never find it anywhere else because it all came from my brain and my understanding, and nobody else has my opinions on things because a lot of that was opinion and sentiment. So if you ever hear anyone else saying that on the internet, know they're copying me. There's one guy who does it all the time at the minute who used to follow this channel. You're probably aware of his name. I'm never going to say it because it's such a loser. But if you're aware of who he is, he's also going to be getting in hot water soon. So I'd advise you to stay well away from any commercial activity that you also might get implicated in, because I'm going to go full fucking force, and I don't want to offend anyone I like. So stay away with proper, clear, and as present warning as I can give to people who I respect. Stay away from that guy, or you'll be caught up in something you don't want to be in, right? And that's the last time I'll be talking about that on the internet. Thanks for your help there, everybody. Tradespotting, you're good. Good day. Go trade. Thanks very much, KT. Love the GME info. Love you, Paul. Thank you, everybody, for being here today. The markets are serious. This is a serious job we're trying to do here. We have to remind ourselves every time we sit down of the dangers ever present, the rules that we use to make sure that we navigate those dangers well, especially the ones that apply particularly to our personality. That's exactly what I'm going to do now ahead of my trading day, because that's how I pay my bills, by trading. Thank you very much for everybody being a part of what we're trying to do here. I'll see you all in the next show, and check out today's pre-market show. I think it's really worth watching. I did publish it late last night, so some people might not know if it's relevant or not. I'm telling you, it is. You'll enjoy it. Thanks. See you. Don't forget about Twitter and streaming there. Just a thought. Good shout, Paul. Maybe I will have a little bit of a look there. I heard that guy, the truck driver, Carlton, what's his name? Truck driver Carlton or whatever. Is he Will Smith's brother? The guy who does the Republican news. The truck driver Carlton guy. He'll be on Twitter, isn't he? Doing his show there or something. It's all good in that, innit? It's all good. I do want to be in a bright, open place that presents this information to people who aren't necessarily the same personality type as myself. That's one of the biggest benefits, I think, of the brand of YouTube, is that you can watch and enjoy content from people that you wouldn't like in real life. And that's one of the things that I respect people who follow along with the content. They've got a relationship with me, and it isn't based on necessarily affection or kindness, but it's on the shared discipline and goal we have. If that's you, like me as well. What's wrong with you, weirdo? Hit that like button too. Bye.